I ended up making $90,000 by the end of that year. So effectively a half a year, 90,000. I withdrew some money and then I restarted my account exactly at $100,000 going into 2021. And then 21, we ended up going from that 100,000 to over 3 million. And then that's when I got the boot from my broker. Don't get more until what you've already gotten is giving you traction, because it's not like the setup isn't timeless. It's just that the market's not being conducive to a breakout buy right now, or an earnings gap up, or a flat-based breakout, or whatever the entry tactic that you've learned might be. What helps me get myself into a good position is, in particular, when the market's pulling back, I focus on the strongest names, and then when the market's acting very strong, as it's been for the last 2 weeks, I start to focus on the weakest names, because I don't just want to sit there long and long only. If the market starts to give me some distribution, I am comfortable playing the short side as well. That's one of the first things that catches my eyes. It's like, how are you performing in comparison to the market? And then are the stocks that are acting well, do they live in a similar group, right? Cybersecurity, for instance, has been one of those standout groups. Your Rubrics and your CrowdStrike and your Zscaler and your net. Okta was really nice until earnings. And so you started to have multiple stocks, right? Birds of a feather flock together that are acting well. And those are ones to pay attention to. When the market's going down, don't trade relative strength, just track it, right? And then the moment that the market begins to push higher, then you trade relative strength. Now we can go after that stock. I'm a swing trader first. I'm a position trader second if the stock acts well and then just gives you that opportunity to be a position trader. I'm never just going into Rocket Lab and being like, yeah, I'm going to position trade a $5 stock all the way till 30, right? Because nobody knows that that's going to happen. Focus on stocks in leading groups. Don't trade your favorite stocks. Make the stocks that are in leading groups your favorite. Don't just say, I like XYZ company because of, whatever reason you conjure up in your head. To me, all stocks are bad until they're showing you a profit.
Hey everyone, welcome back to another episode. As always, we bring top traders, US investing champions, and market wizards here onto the show to share their journeys, their strategies, the mistakes they made throughout their careers, and key learnings that they want to pass on to you guys to save you time, save you money, and improve your performance. We've been lucky enough to hear back from many viewers over the past few years about how much of a positive impact this podcast has had on their trading journeys, and we're incredibly grateful for all the support. If you're looking for a free, quick, and easy way to give back to us and show us some goodwill, please double check that you're subscribed down below. And if you aren't, go ahead and click that button. This helps us out in two ways. First, it lets YouTube know that this is a valuable resource and it'll push it to a wider audience of traders. And two, it allows us to reach out to bigger and better guests in the future. So thank you so much for your support in advance. Also, go ahead and click the like button if you haven't already. And if you have any suggestions for traders you'd like us to bring on the show, also let us know down below in the comment section. And with that said, thanks again for your support, and sit back, relax, and enjoy. All right, welcome back everybody to the TraderLion Podcast. I'm your host, Richard Moglen. This is brought to you by the Trader's Handbook. Joining us today is someone I've been really looking forward to talking with, Ariel Hernandez. He's known on Twitter as Real Simple Ariel. He's a day trader turned super performance swing trader. Really excited to get into his setups, his process today, the good and the bad. We're going to make sure to cover both today, both successful trades as well as, of course, as all real traders have, losers and mistakes that we all make and just try to learn from. So Ariel, thank you so much for being here. Really pumped to have you on and looking forward to this. Thanks so much for taking the time.
Yeah, of course, Richard. It's honestly my pleasure. I've been a big fan of what you guys have been doing over at TraderLion for many years. There's been countless interviews that you've done of legends from Stan to Mark to Pat Walker that I've learned tons from. And I've taken little pieces, and we'll go into that from all of those gentlemen. So, yeah, I appreciate you just for having me, and looking forward to this conversation.
Awesome. Yeah, great to have you. To start with, I always like to bring it back to the very beginning. So why don't you dive in with, how you first got interested in the markets, when you first, learned about trading and all of that, and just those beginning years about, how to actually learn this, how to build a system, all of that. Because everybody at some point starts from the beginning, but that's about, how you apply yourself and all that separates the best from the rest. So yeah, I'll take it away.
Yeah, so really my journey begins, like a lot of traders that I'm sure you've spoken to in the past, in 2020. And right when I kind of started to dive into the markets was actually middle of May. in 2020, and the market was already kind of in this recovery. So for me, it was just a matter of, I didn't really know what I was doing, so it was just getting a broker open, and then even learning the most simplistic things of how do we place an order, what is a market order, what is a limit order, and then, one step further. I mean, I remember I would go on StockTwits, and they used to have that little bar at the top, and it was like trending tickers, and I would click on it, and I would be like, okay, the stock's up 150%, 7% today, or 300% today, 400%, and I was just like, what is going on here? And then so it was just, let's get the broker open. And I started as a day trader because when you don't really know anything else, in particular, not even risk management, you used to see green and just kind of want to take it off the table. And really, when I would make a mistake, I didn't even know what mistake I was making. I was just losing money. And inversely, when I would make money, it was just like I was always kind of, I learned about moving averages fairly quickly, and it was just, let's just buy prices. It's coming into a moving average on a 1 minute chart, and then you get your kind of a little bounce back up, a rebound, because what didn't rebound in 20 and 21 effectively, and then just take your money off the table. And I did that over and over and over with bigger and bigger size. And the thing that that I learned was sympathy trades. So you've got a lead runner, and then I always miss the biggest mover, right? Almost every single day, every single week, every single month. I was never in GME, but I was in AMC. I was never, and then once AMC started to make a move, I was really done with AMC, and then I was focused on costs and Express, and then I was never in TCAT, but I was in DLPN. And so that's kind of, how I got my start, was just effectively as a day trader, buying, and the way I would do it is, I kind of learned from a few other day traders before me, just kind of being in their Discord, trying to figure out what the heck they were doing. And it was just a matter of, if you have a level of resistance, right, where, maybe some short sellers would kind of sell against that level, you would get a break through that level and then a retest of that level. And that was kind of their moment to get out, right? In other words, cover, which means buy back their shares that they've sold. And I used to just look at level 2. So level 2 would kind of speed up, into that level of resistance. The tape would kind of jam, and then it would start to turn back up. And I would be in there buying market orders. And then, you'd get as my account got a little bit bigger, call it 5,000 shares, you would get a little 10, 15 cent pop. Cool, you'd take your 500, 750 bucks off the table, with tiny bit of slippage, you'd make 650 bucks or something. And I would just do that over and over and over and over, seemingly every single day. The nice part was, at that point, the market was so strong, you could do this every single day, and you really wouldn't go home red, right? You were just kind of buying a dip into a prior level of resistance, playing it for a really quick bounce. You would see some green, you'd take it off the table. To me, it didn't matter if it was 200 bucks or 2,000 bucks. I did the exact same thing for forever. And it wasn't really until the ends of 21 when I ended up getting kicked off of Thinkorswim, which is the brokerage I use now kind of for charting, my fiance's account. But I ended up getting kicked off that broker. And then I kind of noticed at the ends of 21, there weren't really sympathy plays. I would wake up, I'd look at my gap scanner, and there weren't any 100% gap ups. There weren't any 200% gap ups. There was no big mover on news. There was these really quiet days where it's like you had these 20 and 30% gap ups on low volume, and it just didn't resemble the environment that I was working with. And at the time, I'm sure you're even familiar with the Christian Koulamagi.
Yep.
That's kind of when we all remember Kodak. And I remember the news article where it's like, he lost 7 figures, and then he was just like, guys, don't worry about me. I'm still up multiple 7 figures. And that's when I was like, okay, who is this guy? And that kind of took me into the world of swing trading, with him kind of being the cornerstone of like the first person putting out content to learn from. And then I just, kind of ran with it from there, finding the Bill O'Neills, the Dan Zangers, the Marks, the Pats, and everybody in between. So yeah, it was kind of a whirlwind journey, but yeah, I started just scalping, almost as anybody would, because you just want to make money, right? I mean, at the end of the day, you join the market just to make money, and my thought was, hey, I have a small account, but scalping, I can make 500 bucks a day, and you tell anybody they can make $500 a day for forever, they'll do it, like reckless abandon, and they'll do nothing else, right? That'll be their new career if you told somebody they can make $500 a day. So that's kind of was my calling. And then, June 1st, 2021 was my effective full-time start date with this career.
Yeah, awesome. And talk to me about, once you found Christian Koualamagi and those other resources, what was that evolution like, transitioning, developing a similar process but a different process, right? To focus on the momentum movers, all of that. What were the biggest mistakes you made early on? What were the difficulties you ran into? What was it like making that transition?
Yeah, well, it was really difficult, Richard, because of course I've got that short-term mindset. And in 2022, as you know, it was just horrible for long side. And even as a scalper, I was a long side only scalper. I didn't know how to short really. And so I go into 22 and I'm like, okay, I'm going to just try my hand at swing trading because, I got the boot and I was like, I got to do something different. I got to, kind of. And I've been watching Christian at this point, and he's seemingly always in the right stocks, at the right time, at the right place, with the right size. And I was just like, okay, what's going on here? And in 2022, I remember this is actually one of my aha moments when it was going into 2022, January 3rd, I bought the XLE, right? And that was the energy ETF, right? I thought it had a really nice setup. It got nice and tight off of ascending moving averages, and we'll probably go ahead and take a look at those a little bit later. And, that was when I first had that moment. It's like, okay, the birds of a feather flock together, right? So like the same groups tend to move together around the same time. And why is that? Because they're just having their time under the sun, right? Institutions are in kind of control of this group. This group is in a stage 2 uptrend. And then before that, maybe they looked like they had some accumulation. They're above all key moving averages. They gave you a really tight entry. You took your entry. It was effectively no headache right from there. And it was multiple names working within the group. Right. So that was kind of, and XLE was the ETF, but I was like, okay, I don't know which of these names in particular I want to own. So let me just get myself involved in the ETF first. And then we'll start to see which names are kind of the haves versus the have-nots. And then, that was a really nice trade at the beginning of 22. And then I was like, this transition's going to be easy, right? I was like, this is going to be a cinch. But then I learned the hard way that the rest of, once I got shaken out, the rest of 22 was very difficult until the very ends of 22. So a lot of small lessons to learn, as it relates to how to find them, how we're going to scan for the stocks that we're going to trade. What is the rocket fuel that is going to take this stock higher? Typically that's, the group that's in, because half of a stock's price of print. And then what are its earnings and sales, right? It's one thing just say, hey, we're trading the theme, and the theme this month or this quarter is quantum stocks. Well, they don't really have fundamentals, right? They don't really have earnings and sales, but they've got a catalyst. And the catalyst is far out, but nobody cares. And so these stocks go on these 1,000, 2,000% moves. So it's just a matter of, can we locate a tight technical setup because it has a theme, and then you can then ride that trend potentially higher. And then, how do we limit risk, and how much of it do we buy when we go to buy it? So those are all questions that I had to get answered for myself, as the years went on. But as we got through 2022, which definitely wasn't easy, 23, 24, effectively, you kind of go through trial by fire, that by the time it gets easy, you realize, man, this is not that difficult. And it's not because I'm a genius. It's because the environment has changed. Yep. Right? And 23 and 24 were that easy. And so then it became another lesson, which is, am I operating when the market is actually healthy? And am I operating? And then that's when the whole thing that Mark said, use progressive exposure, finally clicked, where you're just like, oh, that's what he meant. Right? Don't get more until what you've already gotten is giving you traction, because it's not like the setup isn't timeless. It's just that the market's not being conducive to a breakout buy right now, or an earnings gap up, or a flat-based breakout, or whatever the entry tactic that you've learned might be. So, man, tons and tons and tons of lessons along the way.
Yeah, and I'm curious to hear in 2022 and then even earlier on, what were, some of the biggest drawdowns you went through? Overall, what was kind of the volatility like in your portfolio as you were starting out? Because obviously, as you progress as a trader, you learn that, you definitely want the upside, but you want to really control those drawdowns. So, yeah, what were some of the setbacks within your account that you had to deal with, and how did you, build yourself out of those drawdowns and, continue to compound?
Yeah, so believe it or not, in 2021, the year I started, like the first month was actually fairly, I wouldn't say, it was kind of difficult. I wasn't really making any money. But then like by day number 60, I had started to kind of find, there were literally days, Rich, where I was like making like $2, $5, $12, $25. And then all of a sudden, I started to get a little bit more consistent at reading level 2, where I was going to be buying it, the levels I was looking at, being quick with my exits. And I ended up making $90,000 by the end of that year. So effectively a half a year, $90,000. I withdrew some money, and then I restarted my account exactly at $100,000 going into 2021. And then 21, we ended up going from that 100,000 to over 3 million. And then that's when I got the boot from my broker. And part of the reason that I got the boot was, for anybody familiar with Thinkorswim, or really even at E-Trade, if you place a market order and there's like a 3-cent spread, they'll fill you in the middle, right? And sometimes even if there's a 10-cent spread, like $10 to 10.10, they'll fill you like 10.04 to 10.06, right? And so I used to just market order. And then as soon as price would start to catch up, literally the bid to my average, I used to be able to market order out because they would fill me with liquidity that they provided on the exit. And so I was just a scalper kind of taking advantage of the liquidity they provided on the way in and the liquidity they provided on the way out. So because of that, it kind of felt like, an infinite money glitch, right? That's literally kind of what it felt like. So in 20 and 21, effectively zero drawdown. It wasn't until 22, and we'll go over kind of one of my biggest percent losses of my portfolio at the time, right? I had never taken a single trade that wiped out 15% of my portfolio effectively because I did something super stupid. I was convinced on a theme, which was uranium, being the thing that would power, you needed nuclear energy to power EVs and to power, I didn't know about data centers. I just told myself EVs. I remember California's like, by 2035, all cars got to be electric vehicles. So I was like, okay, well, if that's going to be the case, I was like, we're not going to burn coal. I said, that doesn't make a lot of sense. So my thinking was, we're going to have nuclear power and lots of it. I'm from the state of Illinois. We got 7, nuclear facilities here in Illinois. So that thought kind of made sense in my head. And I started to get really aggressive in Cameco because they're the largest publicly traded uranium producer. Yep. And so I was like, okay, this makes sense. I was like, when they start restarting all these nuclear facilities, you're going to need uranium. And I started to get aggressive in CCJ. And, like a dummy, without any real risk management, I had my whole portfolio in there, effectively. Not quite the whole portfolio, but dang near the whole thing. And I remember I got caught in a gap down, an ugly one. And then that kind of set me back, 15% plus. Besides the fact that I had already been trading poorly, in 2022. So, it was like a 30+% drawdown that I kind of had to overcome. And it was already just bad trading. And then this was like at the end of the year. So it's like, not only have you been trading poorly since March all the way to October. In October, it's just like a really big, machete kind of coming in and chopping your head off. And then it was like I was timid for, the next few months. And fortunately, the one trade that I got myself back into, which of course kind of had to teach me sell rules, how to trail, was Nvidia. I bought Nvidia before it got over its 200 simple moving average. I think it was $167, and then like $175 ads on a higher low setup, which is still one of my favorite entry tactics to this day. And I actually learned that from Pat Walker. And then, it sells at 230 only to watch it go 300, 400, 500. And then it wasn't until that big, beautiful base that I was a bit more seasoned, but it had to go through this long consolidation for me to finally get back in it.
Yeah,
but
I want to pause you there because I want to bring up that chart and talk through that base because I think it's a great example to go through. But first, before we go more into the trades and your style, to sum up kind of what you do right now, how would you kind of describe that to somebody in, an elevator pitch, in 30 seconds? What's kind of your goal in the market? How do you describe your overall process?
Yeah, so what I try to do is I try to focus on leading names in leading groups with good earnings and sales, and I'm a swing trader first, and I'm a position trader if the stock lets me. I know some people will look at a chart and they'll say, hey, the market's healthy, I'm going to position trade this thing. But it's like the stock has to put me in that position for it to be a position trade, right? Something that's going to last for 2 months, 3 months, 4 months, longer. So the stock kind of has to give that to you. So I'm a swing trader first, position trader second. Really, I should say risk manager first is the most important part. I always tell people, I'm wrong all the time. And I take the most common trades I take are small green, small red, and flat, right? The home runs take care of themselves. The big red I do not let happen, right? And so that's kind of my mentality, and it really always is. And then what helps me get myself into a good position is, in particular, when the market's pulling back, I focus on the strongest names, and then when the market's acting very strong, as it's been for the last 2 weeks, I start to focus on the weakest names, because I don't just want to sit there long and long only. If the market starts to give me some distribution, I am comfortable playing the short side as well. And that is kind of going back to 2022, just kind of getting comfortable with both sides of the market. So when the market's very strong, we focus on weakness. And then when the market's very weak, we focus on the strength. And if you did that properly during this most recent correction, that's how you would have found your Netflixes and your Rubrics and your Roblox and your hoods and Palantirs and Nvidia, etc. So, that's kind of always my thinking.
Perfect. And before you break up a chart, and I want to dive through some trades, I know you've prepared a bunch of them, which is awesome. Do you have a sense of your batting average, your average win, average loss? I think that's always good to kind of talk through because, some people, like you said, they think you have to be right all the time to make money in the market, when really most of the people I talk to, they've got maybe a 30, 35, 40% win rate, and let that asymmetry, like you talked about, the big green take care of all the small red trades that they take. So what are a sense of your numbers if you know them offhand, if you've done any recent post analysis?
Yeah, so realistically, I only nail about 30% of my trades, and the reality is that the biggest portion of my trades are flat or small green. And part of the reason is that because within the first 5 days of the trade, I like to de-risk it, and then I like to improve my worst case scenario. So there are times when even a stock will give me like a 6-7% move in a day, and I'm no longer using low of day as my stop. I'm using my average as my stop. If I'm going to get a 6% push from my average in a day or two, the trade will no longer go red on me. So, it's kind of tough to just say, oh, you were wrong on that trade. No, I just closed it for flat. And yeah, maybe it didn't end up breaking the low of my day, but as I've heard Dan Zanger once say, the best horses don't return to the starting gate. So, that's kind of always my thinking. And, maybe I am a little too gun shy at taking any kind of big red, but if a stock is going to work for me, it's going to work right away. And those are, I'm sure you've heard people say this as well. Your best trades tend to work right away. And that's how I like them to work. Like ARK recently, it's like you get that really nice flat pivot, you get the breakout over the pivot, $59, and then all of a sudden, you kind of look around and all of Kathy's stocks are flying, and ARK is really pushing away from your average. Well, if this is the real move, there should be no back test of that 59. There should just be continuation right from there. So, yeah, 30%, in a really good environment, a little bit better. It's rare that I'm going to nail 60% of my trades. I mean, that would have to be a absolutely perfect environment. So
Yeah. And what about the average loss and average gain, if you know those numbers, or even, duration too? Obviously, probably your losses, maybe you're stopped out the same day often or the next day. But yeah, do you have a sense of those metrics too? Your average win, your average loss, and, the holding periods for winners and losers?
yeah, so I just looked at it recently. My average duration recently has been about 8 days for my winner and less than 24 hours for my loser. And that is even because sometimes I'll be in a stock and it'll be green and I'll still kind of keep that low of day and it'll come tag it, 1 or 2 days later. Right. And then sometimes, and then even recently it's like I'll have been in a stock like BABA when it was kind of coming out of the $120 flag and you're in it for only 2-3 days as it rejects kind of the 50 simple moving average. And then if it's going to reject and it can't get through, right, I don't really want to just sit there and hope and pray that the stock can kind of break through the 50. But yeah, recently it's been 8 days on the long side, and and again that's coming on with like a stock that I would have to refresh, but I just finally closed out my Netflix today, and I bought that thing. I want to say April 22nd. Yep. So some will just allow you to be in them a whole lot longer, yep. Which is nice. But Netflix was kind of one of those where starting to act a little bit weak. It got a bit extended from the 50 simple, and I wanted to take it off a few days ago on Friday, and I didn't. I was like, it's a bit extended for Netflix. Like, this thing has never really gone up like this. And then, it's like the market's still kind of tracking higher, but Netflix is tracking lower. I said, I don't really want to know what Netflix is going to do if the market starts to pull in a bit more. So I let it go today, and then of course it bounces into the end of the day.
That's how it goes, man. Let's bring up a chart actually of Netflix. I think that's a good place to start. And then I have one more question about risk once you bring that up, but no rush at all.
All right, let's take a look at Netflix. Netflix was actually the very first stock I was able to get myself into during this bullish run. And this one actually had a few spots that I thought was buyable, and that was as early as one of my favorite entry tactics, which I didn't take because the market was incredibly volatile down here beginning of April. But it's an undercut and rally where you're just kind of undercutting prior, kind of left side of the base where it creates a double bottom. And you'll actually notice as, we could talk about a few of these, they undercut that March low, and the best ones reclaimed it right away, where some of the others just kind of struggled with that level. Like if we look at a Hood or a Palantir or an Uber or a CrowdStrike or a Netflix, they reclaimed that March low very quickly, right? Even a stock like Tesla didn't really even break March's low. But Netflix was one of the first names that I was able to get myself into, and I kind of got myself in just over this little flat base. Mm-hmm. And on this day, 421, was the day that the market had the very, very bad breath day. And so Netflix is up on earnings, but the market's just kind of pulling in, and you're like, breath to the downside is expanding. And I always say to anybody, when the market's going down, don't trade relative strength, just track it, right? And then the moment that the market begins to push higher, then you trade relative strength. Now we can go after that stock. And Netflix was the perfect example of that. I had $1,019 buy with $1,004 stop. So, you're talking about $1,000 stock with a $14 stop. Peanuts when we're talking about percentage. And then just a absolutely lovely gain. And then today, obviously, it does hold the 20. Hindsight's 20/20, but it did get a little bit extended, and today were just my final trims on it. I figured, if this thing is going to go higher, it will consolidate. It'll go sideways a little bit, and then it'll give me an opportunity to rebuy it. But, some of these names that have gotten most extended recently, whether we're talking about Netflix or Rubrik or SE, they were all going through some pressure today. And, I didn't really want to be sitting in a stock potentially coming back down to the 50. Just my thinking.
Yeah, and for everybody's context, we're recording this on June 10th. So we'll see how this little bit of weakness plays out. To start with, do you mind talking through for a typical buy from, one of your key setups that you'd like to trade? What's your typical process for defining your risk, both as what your stop loss would be, as well as, is it based on a technical level, a standard percentage level, and how's that translate to your position size in that position as well? If you wouldn't mind walking us through that, that would be awesome.
Yep. So typically, if I had a bit more traction already, like if Netflix wasn't the first stock that I was trying to get myself involved in, then it would be one, because it is a bit of a slower mover, I would try to take some more, right? But when I'm looking at this level and I'm just looking at this 1019 breakout, and really the day before it had this nice push, but then the failure, and that wasn't its fault. That was the market, right? You don't want to trade relative strength on a market down day. You just want to track it. And for me, almost always, I try to have my entries be over prior day high, because you can't really be considered a breakout unless you're actually over prior day's channel. So my entry is a break over prior day high, and then a stop at low of day, right? So that's always kind of my initial thinking.
Go-to.
And then when I'm looking at what is low of day, unless it had some massive morning washout where like now it's kind of expanding my risk to low of day. For Netflix, I want to say it was like 1 point some odd percent to low of day. So I'm like, if I put on 10% position here, I'm risking 0.15%, right? So 1/10 of 1%, 0.2 of 1%. And to me, it's like, okay, if we can start to gain some traction from there, good, right? And so that's always my thinking. And then once I was able to get some traction on Netflix, that allows me to start to, and as setups are proliferating, go to the next one and say, okay, now I'm starting to see a Palantir shape up with a very similar setup where it's just a small little bull flag while the market has this, these 4 days down in a row. And that's something that my eye always catches, right? How is a stock performing compared to the market, right? Or compared to its peers, right? And then that compared to its peers helps me figure out which one I really want to own. And compared to the market kind of helps put my eyes on the right names, and at the right time, as soon as the market begins to go up. So Netflix was just a simple buy on the 22nd, 1019 over prior day high with the stop at low of day 1004, right? Nothing too complicated about that, and just a very simple horizontal flat base, kind of good above the line, bad below. One of the things that I always, will tell people is try not to do downtrending lines, because if you do a downtrending line, some people put them through the candlesticks, some people put them through the wicks, some people include the bodies of some candles, right? They just try to make as many points touch as possible, when the reality is if you can just make a nice horizontal line, it's just good above and bad below, and then your entry is over prior day high with the stop at low of day. If the prior daily's candlestick was nice and tight, you could use prior daily low. And then that might give you a little bit more wiggle room. And again, it's all, one of the things with position sizing is it's all average daily range dependent. If the stock is a fast mover, like 8, 9, 10% per day, right? I don't want to put 10, 15% of my portfolio with a stock that has a 12% stop to low, right? I mean, that's just nuts, right? You can only take so many trades like that before you've killed yourself. But something like Netflix, if it weren't the first stock that I was trying to buy, I could have gone 20%, and then you're risking 0.3, right? Something totally manageable in case it's a drawdown. But because it was the first name that I was actually able to get myself positioned into, it was just a 10% position. And then, I was able to build traction upon that.
Yeah. So say we're in a good uptrend, you've had good traction. Are you willing to risk 0.5? What's kind of the max of your portfolio that you like?
Yeah, I don't ever really shoot more than a half of 1%. And part of the reason is I tend to click the button maybe a little bit more than I should. I'm guilty of that. I think everybody is, sometimes, and that's actually probably the thing I'm working on most, is clicking the button a little bit less, right? It's like, you think you're a trader, and as a trader, you think that means you have to be doing something. But the reality is that there are just days to do nothing. Right? Yep. To just sit there, manage what you own, suck it up, take the pullback in the 5 longs that you're in, And, if they don't break the 10 or the 20 or the 50 at this point, right, just let them work, do nothing. And that's the best thing that you can do. But in other instances, you think you want to micromanage your positions a little bit, and everything's pulling back, it hurts. You're just like, oh, I'm out of here. You start freaking out a little bit. But yeah, for me, it's just typically kind of take it one setup at a time. If the stock market is already in a healthy uptrend and it's providing you with maybe two names, go ahead and get involved in them, but really no more than 0.5% per position. And usually when you stick to names that are a bit more liquid, don't move 10-12% per day, that means you're not really trading the small caps. Stops to low of day aren't usually that big at all.
Yeah. So no more full account positions.
Gosh. And yeah, Cameco, that killed me. And that was one of those where it was like, if you really want to make this a career, you can't have those. Those are blowups. Yeah. Because now all of a sudden you have to make 25% on your portfolio just to kind of get that money back, or 20% on your portfolio. And it doesn't feel good. So that's a lot of work. That's effectively like having to go through an awesome 6 or 8 week period that we've been in recently. And then all of that just goes to making back gains versus making actual progress.
Right.
So
and that's why capping the drawdowns in the first place is just the key to keeping your mind right, keeping your account right, all of that 100%. Let's dive into a few more trades here, if you don't mind. And yeah, so many names had that undercut and rally off the
so
low.
many. We can just run through a few of them, Richard, if you want.
Yep.
So Netflix was the first one what kind of caught my eye, and you can look at Palantir. Did something very similar. This pullback was a little steeper, but 74.57. Hood did something very similar at 35, and then just look at this absolute gorgeous double right from there. CrowdStrike was another one, and this one's actually was the third name that I bought for myself over 400.
Yep.
And this was again could hardly undercut March's lows. And if you compared that to what the market was doing, the market was really the market was just imploding. Yeah, it was just getting absolutely destroyed from that low. So here's March's lows right up here, and this is what it ended up doing.
Yep.
Right. And it was another reason why I was so interested in Tesla. I was like, Tesla's just got to get back above the 200. But, here's March's lows. I mean, it really just held it almost to the cent. And then, it was just a matter of, do we have a spot to get into this thing? And, when it got back up above its 200, for me, it was buyable. And then obviously these last couple of days have been whoever likes Tesla. It's been quite the ride. That's one of the first thing that catches my eyes. It's like, how are you performing in comparison to the market? And then are the stocks that are acting well, do they live in a similar group? Right? Cybersecurity, for instance, has been one of those standout groups. Your Rubrics and your CrowdStrike and your Zscaler and your Net. Okta was really nice until earnings. And so you started to have multiple stocks, birds of a feather flock together, that are acting well, and those are ones to pay attention to.
Yeah, and another theme, MSTR, I don't even think undercut that relative low. So yeah, that's a key thing I'm watching too.
Here's March's lows. Yep. Didn't even get there. In fact, it tried to undercut the 200 and immediately reclaimed it. I believe this 4.9 was that Wednesday.
Yep.
Where just the market was having an insane day. And then I told myself, stocks that start to push out over Wednesday's high first, right? Because that was such a big up day. You kind of just knew in the back of mind you were going to get some rest right after that day. You knew that up day was so awesome, right? It like felt like maybe a follow through day, but sometimes the biggest up moves occur in downtrends, right? Everybody knows that. And even at that time, everybody's like, oh yeah, we're just going to get a little retrace and then roll back over. But I started thinking any stocks that start to take out that Wednesday's highs look good. And again, Netflix was one of those names that just started to act well, even right from there. I think it was like $951 or something like that, where it took that level out and you're off to the races.
Yeah, 100%. And walk us through your thought process in terms of finding an entry. Say we've got an extension down like we did, and then things pop higher. What are, you've mentioned the higher low setup. What are the first actionable spots that you look for in a name that catches your eye as a potential leader, that's holding up well, holding above the moving averages, breaking above key highs before everything else? What's kind of your playbook for trading a stock up the right hand side of a base?
Yeah, so the first setups that I really like to trade that kind of come to mind, and they're going to show up in weakness, is those undercut and rallies, where it tries to undercut that, that weekly bottom or a daily bottom, kind of comes right back into that level, similar to what we see here in MSTR or the CrowdStrike, which we mentioned. That's the first setup that I look for. Then if it's a valid undercut rally and maybe you just missed it, then we're looking for a push. And then because that will kind of confirm that maybe there's some accumulation, and then if there's a few other stocks within that group that are acting well, like a Rubrik, Zscaler, then all of a sudden you're now seeing that there's some participation in that group. And then now we're looking for some kind of digestion and a higher low setup. So a higher low setup is something that's, exactly what it sounds like. So if you have your low in a CrowdStrike, now all of a sudden you get that pullback again, and then you've got a higher low, except this time it's occurring on a flattening or an ascending moving average, right? And then 2 days later, right, you get this, we talked about this little horizontal base, and then just over, and then again, as CrowdStrike, I took it as it was going through that $400 psychological level where you almost look at it, you're like, okay, here's a flat base, here's 400, good over 400, bad below 400, and really just treating it at that simply, right? Where you're just like kind of good above the horizontal line, good above the whole dollar, and not to mention the market appears to have bottomed, and not to mention, right, Rubrik, Zscaler, PanW, Okta, Net, they're all acting well, even CYBR, where you've kind of got that, like the group strength is really starting to turn up, so the group grows from being ranked, 55, and then, by the end of the month, they're at 30, 34, right? It's like one of those deals where, and you can just see it in the charts, they're being accumulated, they're in an uptrend, they're above all key moving averages. And it's like one of those things, Richard, where you would look at an Apple and you would say, why would anybody want to own Apple here? Right? If the market begins to turn down, Apple likely could go see some lows. Like how much stronger does the market have to be to get an Apple going, right? And if it can't get above the 200, and that's the first line in the sand for me, if you're not above the 200, unless you're one of the 5 best companies, 10 best companies in the world, I don't even want to focus on you. So, but yeah, a simple higher low setup, then followed by a flat base breakout. The next setup that I would love to focus on is an earnings gap up, and then the one that I learned from Amit, which is the high volume close. And those this earnings season have given us some spectacular moves. If of course you were focused on Oddity, Dave, and Sezzle, and those are 3 setups that everybody should take a 30 minutes of their day and listen to Amit on that setup.
Yeah, for sure. And I want to bring some of those up, but first, to use Crowd as a really good example here. I don't know if you remember exactly how many shares you took, but break it down for us. If you're buying it again, on that day, your pivot point was at 400 level. Where would your initial stop loss be, and how would you do that calculation of how many shares to buy based on how much you're risking? So
I'm actually pulling my trade up right here, Richard. So on that day, 424. So it would have been 424. I had a $400.68 average on 3,000 shares. And so effectively I'm using low of day, that day as my stop. And obviously by the end of that day, we are closing 414, right? So completely in the driver's seat on that trade. And that is exactly how this would have been this day here, right? So you're buying it as soon as it's kind of going over this little flat pivot, as soon as it's breaking out over prior day high. I mean, again, I missed my stop by a couple bucks, but I remember this thing kind of moving fairly quickly in the morning, and just kind of trying to get positioned in this thing with any sort of size. Sometimes can be a little uncomfortable, but it wasn't, to my portfolio, it wasn't a massive position. It was about a 7% portfolio position, so it was fairly comfortable. And then again, stop to low of day, so already kind of back of mind. I know how much I'm comfortable willing to lose. And then I know that I'm operating in a good group, and I know that the market's already pushing higher and has already given us a valid follow-through day, right? And I know that after a follow-through day, if it's a valid follow-through day, you really should just stop focusing on the market, right? If it's a valid follow-through day, you want to start to actually just focus on your stocks because, right, stocks start to become decoupled from the market, right? Some stocks will run up more, some will run up less, some will lag, some will lead. But once you get that kind of a valid follow-through day, and for anybody who is watching this and isn't completely familiar with the follow-through day, it's just effectively, the market will give you a low, 3 to 4 days later, it will just kind of float higher, and then on that third or fourth or even fifth day, you'll get a pickup in volume and a push over prior day high. And hopefully at that point, you're reclaiming a key moving average, like, maybe for some people, the 20 EMA, the 20 SMA, sometimes the 200, whatever level that might be. And then for the market in particular, it's like you were coming off of really, really bad breath just a few days prior. So that made it even better. And then the very next day, it's like you're getting a gap up and a break over prior day high of that very bad breath day. So anybody who might have shorted, anybody who might have sold their stocks, they're kind of piling right back in, just to get repositioned. So just a break of low day was my stop. The first spot I sold some was on 428. So first red day. So just like I talk about 3 to 5 days, I like to de-risk some of my trade. So 500 shares were sold on that day at 418. I didn't sell any more. Another 500 shares at 430.94 on 429. So again, a few days later, this would have been, just a little bit bigger of a push. 429. Yep, the very next day, trimmed off a little bit more. Didn't get any more sells off until May 7th. So as this was breaking the 10, kind of on the gap lower at on 5.7 at 425.18. And then this thing just kind of kept chopping, and I just kind of kept slowly peeling some off. So 448 was my next sell on the 21st, which is the day that this, that squat. And I got a little bit frustrated with it because I actually added some thinking it was going to break out. I was like, okay, this is a nice tight day. I'm going to add on the break of prior day high. So I actually added 500 shares. I didn't sell. I added 500 shares at 448.16, and I ended up taking those off at 440, and then the last of my position off at 434, which just goes to show you that if you overtrade, right, not only are you eating a little loss on it, that's that same day, and then that squat. This was actually the day prior to this. What was the stock that actually squatted the day before, if I'm not mistaken? There was a name that broke, and I don't know if it was, I don't think it was Uber. Was it MSTR? So this would have been on the 521. So the day before, I want to say MSTR. One of these names broke the 20. No, this would have been on the 23rd. There was a stock that had, I don't remember exactly which one, that, squatted and then broke below the 20 simple moving average. And in the back of my mind, I was like, okay, small red flag, right? Some stocks are squatting. The market's just been in this really, really nice uptrend for the last 30 days, almost V-shaped recovery, right? I won't be too surprised if this stock's just going to digest a little bit more. It didn't. And of course, you get that squat, you don't respect your 20. And then the very next day it gets picked up right without you. And that's just the reality of being a swing trader. That's how it goes.
So your typical process takes them a little bit off as the stock makes progress. How much is that first sell usually, or that first
a third to a half, and it's really market and group dependent, right? And it's also dependent on how big the move is initially from my average. Like if I'm going to get a 15-20% move in 3 days, I'm just going to go ahead and take off half. And then if it goes higher, I still have half. If it goes lower, thank God I sold half, right? That's kind of my mentality. It makes me completely comfortable, and then just kind of allows me to, use the ascending 10 and the 20, right? There are times when I'm not patient enough to wait for the close of the 20. I see the squat, right? The market feels a little iffy. I see the pickup in volume on that day. And again, I don't know that it's going to get picked up the next day. All I know is that I see the pickup in volume, and I see the squat, the failed breakout, And in the back of my mind, I'm like, okay, I tried adding, that didn't work. Some shares that I had sold off, and then I see the squat. I get a little impatient. I'm not waiting for the 2 days underneath the 20, to kind of make that decision. And so for me, it was just, hey, let's just get it off the table, and then we'll deal with it, if it ever kind of resets back up and tightens up and can get over that level. But as it kind of started to work its way back through that level, now we've got earnings coming up, and I don't also want to get positioned in a stock right before earnings.
Yeah, that's something I'm dealing with too, is and always working with, and everybody's always working on something, is noticing a negative price and volume characteristic, but the stock's still above a rising 20 or rising 10, and it's still in a trend, but you're a little bit too aggressive taking some off, and then you get shaken out, and it's hard to position in a leader once you get that first shakeout of your position. So
yeah, it 100%. Really is. And once you kind of cut yourself out, right, it's like now mentally it's like, okay, now I'm rebuying this thing at 450, and if you're wrong, you're not operating on profits on that thing. So it's like it's easier to watch unrealized gains go back than to just go ahead and stare at a red position. And if you just kind of watch this stock over and over and over, it just chopped, and you're just like, ugh, in here, you're just kind of annoyed by it, right? Because this is, by the way, all this is happening, this ugly price action is happening while Zscaler and Rubrik are going up every single day. So in the back of my mind, I owned the laggard, right? And that's not making me happy. I remember looking at Zscaler at 217, and it comes right up to that pivot level, and I'm just asking, because of the move off of the lows right up to that level again, I'm like, just give me an inside day, right? Give me a higher low setup where you pull back one day into an ascending 5-day moving average, bounce right off of that 5, have a tight little candle, I'll come in and buy it over prior day high. But nope. And then this thing just goes and goes and goes. And meanwhile, this thing is up every single day, and I'm sitting and chopping CrowdStrike, right? So it's like, okay, what happens when Zscaler and Rubrik begin to pull back? My CrowdStrike might be in trouble, right? That's my thinking, right? And sometimes overthinking is a killer. But that was my thinking, and I let it go. And like you said, you look at volume and price, and you're just like, you know what? Let me just get this thing off. It's not the fastest mover in the world. Let me free up some capital and kind of see if I can reallocate somewhere else.
Yep, 100%. Let's bring up that Sezzle chart, because I think it's such a good example of an earnings gap, catalyst gap, and it's just been trending beautifully. So talk us through the setup, how you like to trade it, and this name, because it's just a great case study.
What a move! What an awesome move! So because this thing was in this nice little uptrend, prior to earnings, and by the time you gap up on earnings, you're kind of getting a little bit extended. So one of the things that I've preferred to do is just let the day happen. You don't know if it's going to be a gap up and a squat all day long. You don't know if it's going to just be a gap up and fly, right? You don't know what's going to happen. So one of the easiest things to do is just kind of let that price action happen, do nothing with it on the very first day, and then come into it as a high volume close. So you just literally track the close, 74.98, and you come into that the very next day as, good above that level, bad below. And it's beautiful because that allows you to keep such tight risk management, right? It's good above that level, it's bad below, right? It might mess around with that spot for a little bit. But just keep it very simple, right? Maybe on day 2, it tries to, kind of break below that level at first, but then it comes back and reclaims it. And then it's one of the, famous Scotland fishhook setups. And then again, just good above, bad below. And that's just really my thinking. Keep it incredibly easy. And then again, based on the stop stop of that day's low is dependent on how much size I can take.
Yep.
I might have to take it away from her.
Yeah, no problem. We'll see. I want to hear, so obviously, the HVC is kind of that daily setup. Are you executing on the daily only, or where you look at the intraday like you've got up here? It had a nice range to end that day, as you can see, and then that break above on day 2. Yeah. Point out the high of that range, the tight range the day before, how it closed. Yeah.
Oh yeah, I mean it closed beautifully. I mean, obviously it had this little upper shadow, this little upper wick, but again, you're not concerned about it at all. You're just saying to yourself, look at this gigantic volume that could not have been my Aunt Susie. Right. And then, you see the 6 million shares, you see the massive pickup in volume when this thing was trading just a few 100,000 shares every single day on the way up. Then you get this big gap up, right? It's a, nice earnings beat, surprise earnings beat. And then you get the gap up, you get the high volume close, and you're just looking at the closing price, right? You're not looking at prior day high. You're just focused on that closing price. And then again, for me, my entries are typically always on a 5-minute chart. And a simple 5-minute opening range break. You just let the morning happen. You let your first 5-minute bar, kind of just develop and finish out, and then you come for it, over that first 5-minute high.
So I'd be curious to hear, how do you handle it because sometimes we get a gap up above that HVC. Sometimes it goes. Sometimes we get a pullback into the HVC, undercut and rally at that level. How do you typically play that if we get a slight gap up that next day versus we open below that HVC level?
If it opens below, fantastic, because then you get to see if demand comes through and you're actually just buying it through that level.
Right.
And if you've gapped down below, you're going to get your opening print, and then you're going to start to, it could just be right at your opening print. You don't get much of a little washout from there, maybe 0.25%, 0.5%, something like that. And then a ramp right, and similar to how Sezzle did. Yep. Right. You get this really, really small, and we could look at it on a smaller time frame, a 60-minute. Right at the morning, you get this effectively minuscule nothing of a washout in the morning, and you start to get a ramp right through that level right away. So that's just how I'm looking at it. And then you could wait for a 5-minute opening range break. I personally think that that's usually the best course of action, right? You don't know what's going to happen, and then that 5-minute bar effectively sets your risk. Over that first 5-minute high is your entry. Below that first 5-minute high is your exit. And then again, this one just was an effective, all-day trender closing near highs.
Yep. She wants it, or he wants it.
She can't have it. She can't have it.
And Dave pretty much on the
same
day,
exact thing. It's the same exact thing. Dave was, again, a little bit of a move before, and this one had already kind of shown its hand.
Yep.
Right? It had given you a really nice move up, a gap up on earnings, a multi-month consolidation. And mind you, the market was pretty weak in January, February, March. And meanwhile, this thing is just building a perfect sideways base. So this thing did absolutely nothing wrong. Again, similar to Sezzle, you get an undercut and rally of March's lows, a reclaim right away, a trend up right before those earnings, and then a gap up. So because of that trend up before earnings, I'm a little bit more hesitant on buying, a 5-minute opening range break on earnings gap up day. Just let the day occur and then come in the very next day to buy it. Mm-hmm. And it's like it effectively was the same exact setup, but with, an equally small of a washout in the morning. Mm-hmm. And then you could just buy, this one allowed for a nice little 60-minute. The first 60-minute bar to make a high, first 5-minute bar to make a high. I know some people that I've talked to like to do 1-minute opening range break. I think those tend to be a little bit more volatile, but effectively the same exact setup over and over and over. And not all high volume closes, work perfectly, right? There have been some biotechs, I think like BCRX recently where, very quickly, I think this was the one BCRX, where you get that gap up, the high volume close, and you just can't get going above that level. And so that's the beauty of that high volume close. You're not buying it unless it's going through that level. And you could see how it, even acts at that level. You get to that level and there's just no power there, and it just can't go. It just can't go. It just can't go. Yep. Right? And so that's the beauty of the high volume close. You want to see it get through that level and follow through. No follow through, then is it really a valid setup? For me, it's not. I want to see a stock, like we said earlier, the best horses, they don't come back to their starting gate, right? You break through that level, and you're gone. Is this just going to be one of those that just grinds through that level? I don't know, but all I know is that it's just such a nice simplistic setup, because if you come in, if you're thinking, oh, this is going to be a high volume close, day two, it never even gets close to breaching that level, so you don't have to do anything with it, right? Here's your high volume close. The next day, gaps down slightly, and then just a, kind of an all day fade. So there's nothing to do. It makes it a very simple setup, which is awesome. That's like, for newer traders, just mentally, good above the close, bad below. Don't even have to think about it more than that.
Yeah, APLD was a more recent one that
Applied Digital.
Yeah, it had the catalyst for this one. It wasn't earnings; it was a partnership with CoreWeave.
CoreWeave,
and then this one's a little bit different because instead of the HVC, it's more like you get a setup day the next day, upside reversal, and then we follow through that setup day's high the next day. So it's a slight variation on the same catalyst gapper type setup move. But this was a really fast mover. This isn't for people who don't like trade the high
speculator, more of a speculator. But here's one of those things. This is still a valid setup, but if you just take it, and I tell people all the time, they might not have the best earnings and sales, but just take it with less size.
Yep.
Right? This doesn't have to be a 10, 15, 20% portfolio position. Just take it with less size. Right? And if it's going to pay you, it's just going to pay you with time and percentage increase. Right? It doesn't have to be, don't let position sizing be the thing that pays you. Let time and percent gain, or percent gain be the thing that pays you. So
how much of your trades are gapper type setups versus standard undercut and rallies or higher or low type setups? If you had to think about it, obviously, a lot of it's market dependent, right? There's going to be periods where,
no earnings gappers.
Yeah, there's no gappers, or they're not following through, right? There's periods during earnings season where they get sold. But every 3, every 4 or something, there's a really good season for these. But if you had to think about it, and also maybe in terms of which trades really move the needle, right? Because these have a lot of potential. So I don't know if you have stats offhand or just, in hindsight.
I would say 90% of my trades are not earnings gappers, right? I like price to, kind of build me the range, and then I can come in and get them. And then the place where I actually have most edge is when I'm scanning, right? It's the reason why, we talked about those energy names going into 22 early January, so January 3rd of 2022. And that was like my light bulb moment where I was like, these things move together. And they set up together and they look identical together. By the way, this is no different than what I've been noticing recently when I kind of mentioned ASML, LRCX, and KLAC. They are effectively the exact same chart. So it's like you get this nice little trend up, you get this sideways digestion, and some a little of a deeper of a digestion than others, and then a continuation from this effective little high type flag. Some might call it a pennant, some might call it a bull flag, and you just get follow through. And KLAC, exact same deal, just a little bit more follow through, but you get your move up off the lows, you get your sideways digestion, you get your follow through.
And right? SLAB, SMTC too, also
all of them. ASML, here's another one. You had your AMAT, same exact thing. You have this one, the pullback was a little bit deeper. You had your TSM, which I believe to be one of the leaders, right? This one hardly gave you a pullback. It was more of a, just a little choppy sideways. And sometimes when they look choppy and they're kind of just channeling up, that's because they're not even letting these things pull back, right? And then I remember I tried buying this kind of as a little gap and go setup at 202. Didn't close well, stopped me out at low of day. Kind of bought this as a little 202. Was this 202? I believe, it was on, what day was this? 6/4. So this exact day right here. And again, just didn't close well. And then I kind of just told myself, you know what? I'm not going to hold something with no cushion overnight. And then the very next day, I felt bright about it. And then the day after that, they're just kind of grinding higher, and you can't really find yourself back in it. But they're effectively the exact same setup. And when you look at them, what do they all have in common? Well, they're all in the same group. Yep. And that's like the most important part, right? When it's like sometimes you have to just think past the setup. They're not always going to be your ARK perfect sideways digestion where you get your move up, you get effectively a perfect horizontal base, right? Perfect digestion, shake out before the move, big pickup in volume the very next day. They don't work like that, right? So that was just kind of a textbook, kind of a setup, but they're not always like that. And again, when they're in the same group, you need to pay attention to them. And it's the same exact thing. Like as a quick example, it's really good to just go back really quickly, and we'll extend this time frame.
Yeah, and while you're doing that, TSM, I don't think I've ever traded well. It's like it's choppy for me.
It's choppy.
Yeah.
It's choppy. So this was on. So this is now in a with the 200-day trending up.
Yep.
And then you get this nice little rally in September, October. You get this pullback right into the flattening 200. You get a push right back up, and then you get this really tight digestion here.
Yep.
Right? And then January 3rd, I remember it perfectly. I bought XLE 50. It was, $55, $56. Mm-hmm. I remember it like it was yesterday. And then I remember when I was doing my scan, and then again, beautiful follow through. That's exactly what you want to see. And then all of a sudden, if you looked at something like FANG, again, a little bounce off the key moving average, except it wasn't at the 200 because it was that much stronger. You get the 3 days down, you get this exact same small little tight bull flag, and then the very next day on January 3rd, you get your move, right? Similar deal with COP, same exact thing. You get your bounce off the key moving average, you get your nice couple tight days, and then on January 3rd, what a coincidence, it's also moving. And again, they were all, if you looked at them, it was the same exact move in September, October. It was the clean digestion, right? It was the small little shakeout, the push, the tightness. They all looked the same, every single one of them. And then that's when I realized, like, retail traders aren't controlling these moves, right? These are institutions. And at the time, if you had looked at the group strength of oil and gas, and I wasn't doing that back then, right? I didn't tell myself, it wasn't until I learned it from Pat Walker, focus on stocks in the top 40 groups, where it was like, oh, okay. Now all of a sudden, if I had looked at oil and gas stocks, I bet you they were all in the top 20, right? Oil and gas, the midstream names, the drillers, the miners, the refiners, the et cetera, they're probably all right up there. And they were all the exact same thing, even if some were a little sloppier than others, like Oxy, right? You had your undercut of the 200, your reclaim, a couple of tight days, and then a big pickup in volume, and then again the next day a gap over the 50 and a continuation on an even bigger pickup in volume, and you're gone, right? And it was just everywhere you looked, they all had a variation of the same dang thing, right? All of them. And that was kind of like my moment when I was just like, okay, focus on the groups, think a little bit beyond the setups, have a few entry tactics, whether it's, a break over a key moving average and over prior day high, a little undercut of a prior low and a reclaim, little flat base breakout, an earnings gap up, a high volume close, a higher low setup. And I'll never forget Nvidia. This was like when I learned how well these higher low setups could work, right? It was like, so I had my entry 112, right, where you just had your little move up, a higher low, and then I just took it right over these little tight 3 days effectively.
Yep.
And then it pushed for a few days. You get a pull back into a key moving average, and then a break over prior day high, and those were my ads, right? And it's just like, so you just know your entry tactics, whether it's a higher low, a flat base breakout, a pennant, some people call them bull flags, an earnings gap up, and just know your setups. But more importantly than know your setups, be in the right group, because half of a stock's price appreciation is directly correlated to the group you're trading. If you're trading these subpar, if you're trading like the subpar group, a stock's really not going to push away from your average. You're just going to get chopped around. But even if you have a subpar setup, but you're in the best group in the market, right, you get follow through. Like, even there are moments when like solar has its thing going on, and you could buy RUN, which is a questionable stock, and it's flying, or SHLS or EMPH or Sedge, and they might have their moment. Now, you're not going to get follow through, but when any group is getting love, they're all getting love. And that's just kind of how it works in the market. It's the same thing when Tesla's going, and Tesla's strong enough, you'll get Rivian and you'll get, Lucid, and you'll get, if the group really catches fire, you'll start to get your candies and your solos going.
Yep.
So.
Yeah, and I think a big question that people have is, you're talking about focus on the top groups, the names that are setting up together. What's your screening process, or just overall process to identify that early so you can capitalize on it, right? And not just seeing it after the fact, and because the ETFs don't always show it until they're already extended from the buy point. So how do you notice the stock setting up before the move actually really gets going?
Yeah, so even one of the things too, it's like you're never really missing a big trend. If it's a big trend, it'll go for a little longer than you think. And one of the things is that I will just tell myself, just focus on stocks in the top 40 groups. Because a stock might be, group number 36, and then 3 months later it'll be group number 13, and then eventually it'll be group number 1, right? And if we're just talking about gold miners, for instance, and gold is actually, like, now all of a sudden people are talking about gold, but gold has been on the move since March of last year, like March 1st, February 29th, actually. It's like, I think it was leap year last year. And so it's like February 29th is when gold's on the move. So, just make sure you're focused on stocks within the top 40 groups. And then the first thing I'll tell myself is, kind of when I'm doing my screening process, I'll focus on 90-day gainers, right? So just what are the stocks that are, maybe up the most over the, last 90 days, or my 3-month relative strength scan. And I'll just run through those every single night, and I'll say to myself, do any of these things have something in common, or is this a clean technical setup? If it's a clean technical setup, then I go to the next thing. Am I seeing more within that group? And finally, do they have good earnings and sales? Because that's going to be the rocket fuel that, propels them higher for duration. And then if I just tell myself, well, you know what, the market's in a clean uptrend. Like, the way I view the market right now is, semis are acting well and banks are acting well. If those are acting well, you're not really going to knock down the S&P 500. So if you see clean technical setups, then the next question becomes, are these names in top 40 groups, and do they have earnings and sales? If the answer is yes, and it's got a technical setup that you like to trade, and it's now breaking out over prior day high, just buy the dang thing, right? Like, for instance, Shopify is a name on my list, right? It's got great earnings and sales. It's one of Kathy's top holdings. And if we look at the name right now, it's kind of got one of those little setups where you're like, okay, you move up, and there's your horizontal pivot, right? So just wait for it to break out 112 and a few pennies, and, manage your risk at low of day. All right, don't think about it any more than that. Good earnings and sales in a pretty good group, in a healthy market, and are you coming across setups that you understand, right? I think that's the most important part. If you don't understand it, then it feels random. And if you do something random and you take a loss, how do you study it, right? I think that's really important. Like, oftentimes, people will take a loss and then they don't know exactly what the heck they did wrong, right? And so it's like having those, setups that you do like to trade. And then again, scanning is a process, a 30-day relative strength scan, and then looking at stocks, like building a simple scan on your deep view, right? It's just like, what stocks, have a good timeliness rating, good composite rating, good relative strength. Some people will use like relative strength as it's tracking above like a 21-day moving average. How is it compared to its peers? Right? How is this group acting? Like, I don't even care about stocks in group number 60 or 70, right? Because it's just not prone to give me a 40, 50, 60% move, even a 30% move if it's in group number 70. But if it's in group number 5 or 10, well, then now, we're cooking with something.
Yeah, perfect. And I actually want to go back to Nvidia last year, but move a little bit forward to that base.
That $500 breakout,
yeah.
Man, that was
because this is one of your best trades, right?
Yeah. So I've had other really nice trades, even on the short side, but this was probably one of my cleanest, most trend followed and well-positioned trades, and it ended up being, superb, which you're welcome to. I shared with you the trade. You're welcome to include it somewhere if you wanted after the show, but yeah, it was absolutely perfect, right? It's like you had this gap up, you had this beautiful, beautiful 5-month consolidation, and then I remember this thing on 1.5, and it wasn't out of the base just yet, but if we looked at it on a 60-minute time frame, it was actually just getting above its 200 EMA on the 60-minute. So that was kind of the first trigger in my mind where, it's kind of like for people, anybody familiar with the turtle traders, right, where it's like you're just buying it as it's going through the moving average, and then you're using that moving average as your guide. So that was it, just a break over prior day high. And I'll actually bring this one up here so I could tell you exactly. So this was on January 5th of 24 at 488.63. So effectively just getting over prior day high, literally right here, 488.63. Whoops, that kind of goes to that prior bar. Let me change this really quickly. So 488.63 right there. And then the very next day I bought 505.43, and I remember, so this would have been like $5.50, and now we're above the range. So those were my two buys effectively. And now at this point, we are out of the base. And this thing had done absolutely nothing wrong during this 5 months of digestion, right? And I remember at the time SMCI was also setting up. But the nice part about this one is I had $3 to low of day risk. So I bought 3,000 shares at 488.63. And I want to say I was risking like $3 to low of day. So it was like nothing. And then the very next day, I remember I told myself, like, I want to buy some over 500, and then I want to buy some like at 505 or 510, because then it'll kind of be like confirmation that we're really breaking out. But literally by the time I blinked, we were at like 515.
It pushed, yeah.
And I was just like, well, what the hell? Like, zero chance of adding. But I still had a really nice, comfortable position. And then my first sells didn't come until $720 on February 12th. How much size
did you end up having in this one?
20% of my portfolio. Yeah. And on February 12th was my first trim. So I kind of looked at like this as a little topping tail. And it was like the first candle that I looked at where it was like a bit of a red flag. And I remember this was one of those kind of like I treated Tesla, where you're like, I'm not going to trim on the first 3 to 5 days, right? This is one of those unique situations where, like a Tesla, you're buying it as it's going through the 200 and you're like, I'm just going to trail, right? And I'm going to live with the results, because worst case scenario, it's still going to be a green trade, but maybe not as nice of a green trade because I'm not trying to nail the top. And, in hindsight, it actually ended up being a fantastic trade because I closed it perfectly. But, I saw this topping tail, and we're just effectively cruising above the 10 and the 5 simple moving average. And so my first trim came with half of my position at 720.05 on February 12th. And then the final closing of the position came on March 8th. And again, somebody could have told me it was going to 1,500. That would have been nice. But when I saw this, bearish engulfing after a pretty euphoric move up, and not only that, SMCI at the time took off like a week or two after. SMCI was also kind of going through that euphoric, blow off, and when they're kind of running together, you overanalyze and you say to yourself, okay, SMCI, and I had a nice short there. But you get that big failure in SMCI, and then the back of your mind goes, you know what? And then you get this bearish engulfing. And then I didn't sell it until $888.04, so effectively $88. So, I watched this thing go all the way to, what would have been 970, and I sold it, 80 points lower that same day. So, again, do I wish I top ticked it? Well, I didn't, because it ended up going to 1,500. So even on the day where it has this bearish engulfing, but it's still above the 10 and the 20, again, hindsight's 2020. but it gives you the super nasty move down. And that was just my cue to exit the entirety of the position. And again, what did this thing really do wrong? It went sideways for a few months. It gapped up on earnings, gave you a high volume close. Here was your entry if you wanted it, 203.80. And then, it proceeded to just go another, I don't even know what this is, another 30 or 40%. Yeah, 35%. So, hindsight is 2020.
Yeah, I actually picked it up on the second base within that range, the first range.
Right here.
Yeah. There was some
I'm
nice
assuming,
options.
right?
The day before, actually, yeah, right there, yeah.
Do you like buying it right against that moving average as well?
I do. I find my best trades are when it's closest to I don't know what your green line is there, but
that's the 10-day.
Yeah, 10-day or 21 EMA, depending on how fast it's moving off the lows.
Yeah.
It's best. When I get extended, that's when I get into trouble, and you sell a little bit too early, and then it sets up better and goes without you. That's
and this is just a clean, tight little.
Yep.
You get this small little move up, just a bit before it, and then this is just a series of higher lows, right? Like we talked about, and then now you're coming in right after like a small little bull flag, move up, small little bull flag right up against the 10. You're about as tight as you can get because you're buying it and you're effectively saying to yourself, below today's lows, I'm out of there.
Yep.
Which is nice because, again, if you try to be a bit more proactive with your buying and your selling, because you're at your screens, right? If you're not, some people might use the last pivot low. Like some people might give it all the way to 80. But then your sizing has to be a little bit different. Yep. Right? If you're buying it nice and tight against that level, and then the next day it has, follow through. My surprise is that you held it into earnings with only a 6% cushion.
Yeah, I picked it up. That was kind of an ad there. So I picked it up versus the lows initially against the 10-day, and then added on that next day that we talked about.
Got it.
So I built up that position a little bit, and I had traded this one well during the prior run up too, so I was pretty familiar with Nvidia. But this is just
an awesome move. It was. It's funny because it was an even better setup at 500 than it was at $163 when I initially bought it, or $160 because it's now in an established uptrend, right? Established uptrend, and so that's why I tell people all the time, like, you're not missing anything. Just don't FOMO into stuff, and definitely don't buy stuff when it's extended from the 50. Ariel, what do you think about Zscaler? Ariel, what do you think about Rubrik? What do you think about SE? Leave it alone, right? Let the 50 catch up, and then if it goes sideways for weeks, for months, the longer the better, and then come get it, right? Months later. Don't go chasing something that's way extended from the 50, and then all of a sudden this thing goes sideways for 5 months, and the 50 has caught up. I mean, it's resting right on it. So it was nice that you ended up catching it up here. I did not trade it up here anymore at all, which, another 30% move. You can't really beat that.
Yeah,
that's all I really ask for.
Those key reversal days are such a good example of the reversals. Yeah, there was the early one, of course, but then that one is such a key thing. I was talking with Stan Weinstein about this chart, and he really pointed out these as something to look out for. And it's going to digest after that bar. Maybe it goes higher a little bit, but that was pretty much the start of the basing process right there. All right, we talked about Nvidia. We got to knock ourselves down a peg. Let's bring up that CCJ trade.
Oh man,
because I think it's good to talk about because
just reliving this one sometimes kills me because I see where it's at now. I was just looking at it earlier today to send you the notes, and I had 60,000 shares of CCJ. This one kills. So 65,000 shares at 25.62 on October 11th, and I got caught. I remember this one vividly because I remember I told you the story where I'm like very, very convicted that this thing is going higher. It's going to. And this was before I was, still a good swing trader, right? I kind of had to go through this. And one of my biggest lessons was if you're early, you're still wrong, right? Because you don't know, like solar might still end up being the world's biggest thing. But if you've been bullish on solar for the last 2 years, you now need this thing to go up 500% to get your money back on Sedge. Mm-hmm. Right? So that's the reality. or more. And so I remember I bought CCJ on 10-11, right? I wasn't even concerned about the 50 simple moving average. I told myself it was just, I was just buying this as effectively a higher low, didn't even break prior day high, nothing. But here I come buying it as an undercut and rally of prior day low and a reclaim of prior day low. And I have a 25.62. I oversized it massively for the size of my portfolio. And that same day they post an offering because they were buying a plant from Honeywell. And, it turned out to be the right thing. It's a refining plant so they can enrich uranium, et cetera, et cetera. And I'm holding this thing overnight. I get off my computer screens. I don't think anything of it. It's like 6 o'clock in the afternoon and I come home and I'm down, $4 a share. And I'm having like palpitations, I'm like, holy, like what is going on here? And I froze. And it wasn't until the next day where I was like, okay, if it can hold this gap down low of overnight tomorrow morning, I'm just going to hold on to it. I'm going to diamond hand it for forever. And sure enough, the next morning, it comes in the open, it breaks that after hours low, and I end up selling it 21.82 the entire position. So super, super nasty lesson to learn. And again, a gap down under the 200, that's normally a cue to get the heck out. And I knew that, and so I did. And what hurt was, even a few days later, this thing kind of ran right back up to my average. So like just 2 weeks and you're like, you just took this huge devastating loss, and it's right back up at your average just, 10 days later. Hurt. But again, it's not like this thing even really went anywhere. It just, effectively built a little base along these lows and eventually got back up above the 200, eventually consolidated really nicely where, it wasn't below the 50, it was above the 50. And then, it's not until months later where you get this big pickup in volume, what probably people should wait for. And again, that would have been the spot where you could have bought it, or even the prior day as support, and then a nice close, right? And then continuation the very next day. But it was a very, very painful lesson to learn. The thesis was awesome, right? And I remember, when you're struggling, Richard, you'll come up with theses because you want a big winner, right? Instead of the big winner just taking care of itself, you'll be like, you want to come up with the next holy grail idea, right? Whether it's the data centers or the humanoid robots, and this is going to be the next big thing, right? In my mind, you needed nuclear power plants and you needed companies who provided the enriched uranium, so that we can power our electric future, right? And so that was the thesis. CCJ, outside of Kazatomprom, it's the largest listed, uranium miner. They provide like 10% of the world's enriched uranium, and they're like the biggest publicly traded one. So I knew that that's why I wanted CCJ. And then obviously, looking at it today, being early is being wrong. They're exactly the same. And when you oversize, maybe if I had much smaller size, like, just foot in the door, 6,000 shares and not 60, you can hold a pullback like that and not really care. And just say, hey, maybe be that guy who's like, hey, maybe I'll just add some more down here. This is a deal, right? I'm familiar with Chris Camillo. I love him. I think he's brilliant. He'll get that thought in his head, and he looks at cheaper price. He doesn't care about the chart. He looks at cheaper prices as an idea to buy more. But what I know he doesn't do is I know he doesn't take 75% of his portfolio and stuff it into an idea. And then if it dips, he's got no more buying power, right? That's what I did. That was my mistake. But again, having the right idea and then executing it improperly, that's half the battle. It's like you have to execute the idea as well. And when you're early, you're wrong. It hurt. I'll never forget it. And then, of course, looking at it today, I have not traded this stock. I saw the little bull flag up here. I thought it was too extended from the 50 to buy. Sure enough, today it's coming right back down. And, I wasn't going to buy something that was that extended from the 50. But, of course, I see the setup.
Yep.
Right. And but I just can't buy it that extended from the 50. And I refuse to really get myself back into CCJ because it just I hate looking at it. It's my favorite and least favorite stock in the market all at the same time. But, it taught me a very, very valuable lesson in, don't be early, don't oversize, respect the moving averages. They're there they're there to dumb things down in such a big way. If you're not above the 50-day, you're still in a sell cycle. Respect it. And, I didn't. And it just seems like when you're above the 50-day, you could get news like that, that Cameco's raising some money, and price will just pull back to one of the ascending moving averages, right? A company will do an offering and they'll go higher sometimes, which is just, you'd be like, wait, what? And that's what happens.
Yep.
But when you're below the 50 or below the 200 and you get bad news, it really gets beaten up. But man, a lesson learned and a tough one at that.
Yeah, and everybody's got some scars if you've been doing this long enough. CRDO, Fastly. I've been. Thankfully, I wasn't in crazy size, but yeah, I had to sell that one after hours a lot.
This was the FinTwit darling.
Yeah.
I think I knew everybody owned this thing right in here and up, right in here, right in here, right up here.
I had such a good entry on it, and I think I got out
like down here, like 13.
Yeah. I had 13. I think I got out 15 and change, I think, post market. So I acted pretty quickly, but that hurt.
And then it goes from 7, and now look where you're at.
Yeah,
I mean,
and you never know how things are going to react to a large gap down, right? Because this dropped 50% more from where it opened the next day, and then it turns things around and gets more customers, whatever the news was.
They lost their second largest customer or whatever. Yeah. Somebody who would be like 50% of their revenue or something like that.
Yeah.
But then obviously, this had to kill people.
Yep.
Right? Where you just now see this, you bought it up here, you sold it down here, you watch it, and then now you're completely scarred.
Yep.
Right? Where you just can't trade it. And some people haven't, and then the stock has now gone on this, looking at this thing is just crazy, isn't it?
It's been such a strong mover. Yeah, crazy.
Yeah, but recently, off of earnings, right, what would you say? I mean, it doesn't look bad. I don't like what looks to be some distribution in here coming in the last few days. But if it can just tighten up, if it can just tighten up on the right-hand side and build out a new little base here, this could just be a cup and a handle, and then you get a nice, strong breakout over 81, 82, and you're off to the races.
Yep. Well, let's bring up ARKK, because I think this is another one that you traded well last year, and this is just such a great move to study. Again, more based on a story almost versus the fundamentals, but what amazing price and volume action, and such great price and volume action to study how it pushed higher, tightened up inside days right before things took off. A really good name to study from last year. Just go bar by bar.
Yeah, so I actually, believe it or not, ASTS was already on the move. Yep. And ASTS was acting awesome. For anybody so I bought this on 8/15. For anybody who doesn't remember ASTS, this thing was on the move, right? I mean, this thing was going vertical. And I remember at the time, right, how we talked about the way I used to trade in 20 and 21 was looking for sympathy plays. So first you get your lead runner, and then behind your lead runner, you would get some kind of follow-up action, right? And so I remember this thing just kind of slowly grinding and thinking to myself, like, there has to be one, right? There's got to be something that's going to follow this move from 2 to 22. It's up 1,000% at this point. And that's kind of when I came across Rocket Lab. And so even on this massive up day on 8/15, Rocket Lab for me way down here was just this nice, what looked to be stage 1, right? Where if you zoom out even a little bit further, right, it had just been kind of digesting, just really long sideways. And, you get this nice little bounce off the 200. You get a really nice, gap up for earnings, little nice clean earnings gap up. And so that kind of catches my attention. And then this, again, because it's a bit cheaper, sloppy little sideways digestion. But that's effectively all it was. And for my Rocket Lab, just so I can get this clear, my Rocket Lab was bought on 8/15. So it was that same big day that ASTS had up on earnings. Rocket Lab had just had a little gap up on earnings. And my first buy was 554. So effectively, me trying to buy it over prior day high, but not even really getting into it until I noticed ASTS going nuts on its own earnings. And I was just like, okay. And I'm on FinViz. I'm looking for stocks in a similar group, and Rocket Lab. Okay. They both, launch rockets. They got some satellite potential going on, and boom, I'm in Rocket Lab 554. And I ended up getting trims off the very next day. Right? So it's like you get this nice move off, and this is me de-risking the trade, right? And my trims were at 648. So, 20% move effectively from my entry. It was like 18%. It was actually what it was. And now I've got a third of my position off. I don't sell anymore. And again, even like this action where you get this nice little move up, you get this, low volume, almost no volume pullback, right? A very tight day before a pickup in volume and continuation, right? And then again, just a very simple flat base where it's like you kind of get up to these highs, you go up, you start to digest again, another really tight day off of a key moving average before some more pickup in volume continuation. That really is just how price, tends to go, right? It just goes up, it goes sideways, it goes up, it goes sideways, it goes up, it goes sideways, it pulls back, it finds support on rising moving averages, it gets nice and tight, and it so on and so on and so on. And literally that's how it plays out. My next sells on Rocket Lab came on 927. So where the heck did I sell this thing? On this push right here. So you get that secondary move, that secondary leg out of that base higher, and I get some 920 sells off, 927. So effectively right in the morning, I'm trimming off some more. And at this point now I'm down to my trailing position, and this thing does absolutely nothing wrong. I mean, again, this is even a nice move, right? You get this move up, and then you get this nice consolidation, and nice this little higher low flag effectively for another entry if you really wanted on 1016. I didn't add any more. At this point, I'm up 100% on my shares, and I'm just like, you know what? I'm going to leave it alone. I'm not going to do anything. Of course, in hindsight, I hold my my $5.50 cost basis. I don't sell any at 650. I don't sell any at 927, and then I sell some at 30, right? But of course, that's not how it works. I end up holding for the entirety of this move. Even this nasty down day, it didn't bother me at all because I was like, okay, I'm up 300% on my shares. If this thing just wants to build out a long base, I'm all for it. And at this point, I told myself, on this gap up, I'll be using the 50 simple moving average. The stock had earned that right? And it's kind of how I told you in the beginning. I'm a swing trader first. I'm a position trader second. If the stock acts well and then just gives you that opportunity to be a position trader. I'm never just going into Rocket Lab and being like, yeah, I'm going to position trade a $5 stock all the way till 30, right? Because nobody knows that that's going to happen. And all I can really do is trim along the way. Yes, I could have added, but I had enough shares early on that I didn't really feel I had to add any. I was just down to my trailing position. Even when this happened, even on a massive pickup in volume, didn't bother me, right, at all. And the stock did nothing wrong. I mean, found support right on the 5 simple moving average and just started to trend higher again. So it's just like, did anything even happen on this day? And this thing went higher all the way to 30, effectively built out a brand new base. And at that point, usually I like using higher lows as my new stop, not necessarily a moving average. I like using price structure. So the way I'd kind of look at it is, if this was the low of your consolidation right in here. So here's your low, here's a higher low, and then, this thing's starting to build kind of like your new higher low, but above the 50. I actually let it break the 50 instead of just like exiting right on the break of the 50. And again, you're in at your cost basis is sub $6. Like, You don't really care, right? But then on this day here, this would have been 224 when it kind of started to take out the low of this little structure right here is when I got out. So my final sells were 23.13 on the last bit of my shares. And if you looked at kind of how I pieced myself out of the position, the totality of my shares was like 100 and some odd percent on all my sells, even though at the highs, right, I'm up 300 and some odd percent on like the remaining of my shares, but because my earliest sells were up, 20%, averaged out, it's like 100% winner on all of my shares, which is really nice. It was a super, super nice win. And, obviously this thing has done a pretty awesome job, just finding support on the rising 100, kind of grinding back, but this is sloppy action. I hate buying wedging price action, so I haven't been able to find myself back into Rocket Lab.
Yeah, and the theme isn't quite as strong now as it was last year with ASTS and all that stuff. Now it's the AI and all that is kind of back.
Yeah, the data center names. Data center names are kind of taken up. And again, it's like, Richard, and you'll agree, why is APLD doing what it's doing? Well, obviously it's the deal with CoreWeave. But if CoreWeave were at $40 right now, APLD would have gone nowhere. That's just the reality. But it's because CoreWeave went from $45, all the way to 100 and, whatever it might. I mean, and this thing's still holding up well up here. So it's like because it's gone from $40 all the way to 160 is the only reason, in my opinion, APLD has made the move it's made. If CoreWeave would have hit these highs at $60 and then rejected and we're back at 40, no deal with APLD would have gotten that stock moving, right? That's just the reality. People look for that next one. Whoa, well, look at CoreWeave here. So now they go hunting for that. So when you see that deal and you realize they're in the similar kind of space, right, one has a chance to drag up the other. And that's, typically how it works.
And going back to RKLB, was that one of the, well, obviously it was a fantastic trade. Was this the biggest contributor to your performance last year, or
no, Nvidia.
Other names? Nvidia was, okay.
Yeah, Nvidia was dollar wise, it was like, 5 times the size.
Gotcha.
So, but again, how much capital can you, when you've got a stock that moves 10% per day, which is what Rocket Lab was doing, I can't put more size into it. Right, it's more speculative. When Nvidia is going sideways for 5 months and their catalyst is they're the backbone of AI. Oh, and by the way, they're going to have $100 billion in free cash flow, for the upcoming year. You're buying that, and the stock moves 3.2% per day, right? You're buying that with, and your initial entry has $3 of risk. You're buying that with both hands. Right? I mean, you could if you put 60,000 shares onto a Rocket Lab and you catch a 20-cent dump, you just hurt yourself, right? Versus I have to catch a $3 move lower on 3,000 shares for Nvidia and you have about a similar loss, right? But you can catch it in a $5 stock. These things tend to be way more volatile, so I just can't size it up the way you could. And then I didn't add to, my Rocket Lab. I added to my Nvidia the very next day, and it did exactly what a leader should do. Right. You're breaking out over the $500 base. I blinked, and it was at 515, 518, and then it just tracked along the 5 simple move. It didn't even bother to go up and go sideways. It just was up the 5 simple moving average every single day. So exactly what leadership should do. So yeah, dollar-wise, Nvidia was much better, but percent-wise, Rocket Lab was much better. And, in hindsight, you get way more size onto Rocket Lab, but that's just, again, in hindsight too, I also buy SMCI and I double up the size of Nvidia at, $560. So, but we would all be billionaires by now, Richard, if we had the power of hindsight.
Exactly. Perfect. Were there any other names that you want to bring up either from this current cycle? We haven't. I don't think we've looked at Tesla, the actual chart yet. Do you want to bring that up and just talk through?
Yeah. Oh man, Tesla was beautiful. Tesla was you could not break below March's lows.
Yep.
And then you get this beautiful digestion just underneath the 200. Right. Sloppy, but a bull flag nonetheless. Mm-hmm. And I'm buying it as price is going through the 200. So it was effectively a 293 buy for me. And then I told myself, I'm not trimming this stock. Like, so long as we're above the 200, I'm just going to kind of hang on to it until we start to act, a little bit weaker. And I just held it. I even held through this little consolidation. And then, because it was still just holding the 10 simple moving average. And then when you kind of got this push up. I remember, so 258. Let me see the exact date just to make sure that I'm on the same page. So Tesla. So my first trims happened at 358.07 on 528. So 528 would be a little break outside of this base. And then, okay, so I remember this. You get this really nice push up on the 27th, and then you get this pullback. And it held it really nicely, right? And I was like, okay, that 350, because I've yet to trim. And I want to be proactive, now that the stock has moved, 70 points from my average, I want to pay myself a little bit. But I'm like, okay, where do I take off half of my position? And I remember this thing made a nice move and pulled back and held intraday VWAP, and then, continued higher. And after hours, I was like, okay, fine. Now I've got a level that I can work with, which is that pullback low that held, going forward. And that will be my trim level. It won't be where I cut the entire thing, but it will be where I trim. The very next day, effectively right at the open, we break that level, or we come right down to it. Where did I get my sells? I got them at 358.07. Yeah, so into the end of day as we're breaking that level, 358.07. So effectively the lows of this candle here. As we're breaking that prior support level for the prior day. Now, part of the reason that I did it was I personally thought that this digestion was still a little bit too far from the 50 simple moving average, and it wasn't a spot to add more. I did not add more to Tesla, but I was looking to reduce my position. So this was my first trim on Tesla, and then my second and only sell on Tesla was, I held through all of this. I held this thing even coming all the way back to the bottom of the base, but I was on half of my shares. And then, you get this ramp right back up. You're feeling lovely. You're not worried about it. And then all of a sudden, Elon tweets about, can't stand it anymore. The big, beautiful bill is an albatross and it's an ugly pig and whatever the heck he said. Effectively, right at these highs, you get just a full reversal of the move on the daily. And you're just like, okay, that's what now this looks like, And the very next day, you get this nasty move down, and that's when I ended up cutting the entirety of the position at 329.20. So literally right into this move lower, I'm out of the position just because now we're breaking the 20. We're breaking this little wick low. We're kind of breaking this level of consolidation. And I was like, I won't deal with it. I'll rebuy it if we get back up above the 20 simple moving average. That same day, actually, it tried to get back up above the 20 simple moving average right in here. And I bought the same half that I sold at 335.14. So effectively top tick this 60-minute bar, thinking, okay, maybe we could start to ramp back through. But when you close weak and I had no cushion to hold it overnight and we still couldn't get back above the 20, I just said, you know what, I'm going to leave it alone. I'm not going to mess with it anymore until it can get back above the 20. And my sells were 333.29. So right at the end of day, you kind of close poorly, zero cushion on it, let go of those shares. So it took a small, minor, $2 loss on adding back my shares. But ultimately, it was still a pretty good trade. And then, you avoid a 10-point gap down and a complete catastrophe the next day. Again, none of us knew that we're going to ramp right back up, right? Nobody does. But, if this thing can just set up and give us a little, higher low setup, a pullback, and, maybe a move right back through the 20 simple moving average, then we've got something. In hindsight, everybody would be like, well, you should have bought it as it was going back through the 50 or the 200 or the, it's easy to say, but in real time, when you're putting on, any kind of size for your portfolio, it's much easier said than done.
I much rather... So that obviously was a short-term extension down. I much rather wait for the first higher low after an extension down against the moving averages, let the base mature a little bit. There's less overhead supply to deal with all that. And it's easier to find tight spots after a little bit of that craziness that always happens in your base lows. That's how I kind of view things.
And you're just knife catching. Yeah. Right? Like what I remember I saw people trying to buy it right against the 200 at 306. Okay, well then you cut it. And then you were trying to buy some more at 293 against the 50 down there. and then you had to cut it, and then you thought 280 was too low, and then you cut it, and then you got back at a 270, right? Like you just keep guessing all the way down until you finally nail it, and you're not even making any money, you're just making money back, right? Because you've had to paper cut yourself 4 times on the way down. So that's always my thinking too. It's like, don't just paper cut yourself to death, right? Just let the chart set up, let it set you a tight spot, let it build you a channel, and then come in over prior day high and buy it, and then set your stop at low of day and let it work. If it works, it works. If it doesn't, you're out. Simple as that. And the beauty is, Richard, you know how wrong I am all the time. I mean, I'm wrong all the time, and you could still make money, right? That's just the thing. Show up on the right day. And here's, like, you look at Tesla and now you're like, okay, it's back up above that ugly down day. It's effectively filled the gap. Give me a higher low to work with. And then now I can come on in and buy that higher low setup.
Yep. And I thought your ad after you sold was a good example of, you bought it, it didn't immediately get you in a profit, and it was weakened end of day, and it's much, you'd be happier buying it back higher versus holding and hoping, right?
Yeah.
We want to have a profit on that first day, so we've got cushion, right? We've got cushion. It's showing itself. It's showing strength. And it just didn't give you that, and that's why you exited. I think that's a great example of that.
Yeah, and you almost have to, right? Again, The best trades, just like ARK recently, the best trades, and I tweeted this in real time. So I took a loss, and this was on that Thursday when Tesla and Palantir, for some reason, were getting smoked, right? We knew why Tesla was getting hit. I really couldn't find a reason why Palantir, and I tried to buy it over prior day high, with zero luck. I remember, I bought this thing, zero luck, right? I'm literally buying this thing, and you're buying, and you're like, oh, nice pickup in volume. I'm buying it, right? And that's what you want to see. And then all of a sudden, Tesla starts to get hit, and you're washing out, and you're like, oh, crap, I'm out. And then, this thing just continues to roll over, and you're like, I might have just saved myself. Thank gosh I didn't get stubborn.
Yep.
But then the very next day, Palantir's gapping up, Tesla's gapping up, Shopify's on the move, TEM is on the move, Coin is on the move, Archer Aviation's on the move. I mean, they're all on the move. And these are all Kathy's top. Circle, which Kathy now owns, was on the move. And so you get this nice flat pivot, you get a shakeout before the move, and you look at it the very next day in terms of relative volume. Now all of a sudden, look at these volume bars down here.
Yep.
And you're like, what the heck was I buying yesterday? You thought that was volume yesterday? No. This is volume today. Compared that to yesterday. And so I noticed that, and it was the first thing that I tweeted, like, ARK is taking some really serious volume today. And so I bought it, 59.04, right? You're now over prior day high, and we're off to the races. I mean, literally since then, zero headache. Today was a trim. Today I kind of saw this low get put in, and then, I saw this ramp up, and then I saw it kind of start to fade. And I was just like, all right, let me just take off a third of my position. And, of course, it ends up closing pretty well. But I did go ahead and take off a third of my ARK today, kind of knowing, hey, we're on day 3. And, I don't really know what's going to happen with but again, you get her largest holding Tesla, and you get a Palantir looking like it's ready to go. You get TEM, today with what looks like some potential, wanting to follow through. You start to look at her top holdings, and you're like, they're not acting all that bad, right? So now I'm going to that allows me to be patient. Because it's an ETF, you kind of have to look at the underlying holdings to say, hey, what's going to push this ETF higher? I mean, even Roku getting back up above the 200, even CRISPR getting back up above the 200. Now, again, ugly little tail. So part of you goes, okay, that was the reason to trim some off. But now I can just, let it ride into the sunset, let it, kind of surf the 10 and the 20, and, we'll just deal with it when we deal with it. But if her underlying stocks that support the ETF continue to grind higher as a whole, then, we might be in there for a while.
Yeah, and can you go back to the ARK chart?
Yeah, of course.
On that first day, was that when you moved, just to think through your process, was your stop already at break even by the end of that day?
Yep.
Pretty much, yep.
Yep, absolutely. I mean, I'm buying 59.04, right? So I'm literally buying, right here.
Yep.
Right? Actually, I could pull it up and even tell you the minute that I bought it. Hold on. So I bought ARK at 9:46, so 15 minutes into the open. So right on this candle.
And at this point, are you just watching the 10 EMA pretty much? Is that your line in the sand?
Yeah, and at this point, I know what my risk is. I know it's $1 to low, but I'm thinking I'm seeing Palantir bounce. I'm seeing Tesla bounce. I'm seeing Shopify take off. Shopify was actually the first name that hit my alert that day. So Shopify had like a $107.36 alert, 107.36. And I'm watching Shopify this day, just kind of tag one of my alerts, as it's, pushing out over a few of these days' highs. And I'm over there thinking like, okay, just keep your eyes on Shopify. And then I don't take Shopify, and you could see how, and this is one of her top holdings. Hood's one of her top holdings. Palantir's a top holding. Tesla's bouncing. TEM is holding in there. Palantir is bouncing. So all of her top holdings, they're all performing fairly well. And then you see the pickup in volume. The volume like that doesn't lie. And at that point, I was willing to eat another $1 loss, because again, the low of the day had already been established.
Yep. Right.
You get a move up like this with this kind of volume, effectively in the first 15 minutes. I'm looking at this, and I'm kind of also looking at prior day. So when I'm looking at something like this, I'm looking at it like this, and then the prior, the first few bar, and I'm noticing this, and I'm like, holy cow, what is going on today? And then again, even if you go back a few prior days, you'll kind of notice that I made a tweet where it was like, I got to give Kathy a little bit of credit. The construction of her ETF has some pretty dang good names in there. So even before this ugly down day, I was looking at ARK when it looked like this. And I was like, this looks, because my consideration was, are we going to start to maybe broaden out and go into small caps and mid caps? And if so, am I going to play the IWM, or am I going to play the leverage TNA? And then I looked at ARK, and I'm like, wait a second. This thing's above the 200, looking even better. And then I went and I looked at her top 10 holdings, and I was like, she's got some good ones in here. Like, yeah, obviously Tesla gets beaten up, so you get this shakeout candle. But the shakeout candle didn't even break the lows. And then the next day when Tesla's gapping up, Palantir's gapping up off of that move, you get that massive pickup in volume, right? It's just buy the thing, and your stop is $1 risk. Sign me up, right? I mean, we're talking, nothing really in terms of a percent risk. It's just size in the proper amount of your portfolio. And, what are we talking about here? We're talking like 1.5% risk. It's like, even if you took 20% of your account, which I didn't, you'd be risking 0.3, 0.4, which totally falls into, a recoverable loss. I'm not taking 50% of my portfolio here, but even if you did, right, it would still be somewhat of a recoverable loss. But, it was off to the races, and it comes down to one of those things where right away, do you like improving your worst case scenario? And when I get a move like this and a close like this is one of those things where your mind goes, this horse better not come back to the starting gate. And it didn't. And, today, again, I wanted to be a little bit more proactive on, hey, it's day 3. And I again, this market up here recently, I'm sure you'll agree, has been a little choppy. Getting positioned into new positions has been a pain in the butt. And so it's been difficult because, we're getting like that morning push, and then an all day, like a first 15, 20 minute fail, and then you're kind of just grinding right back up from there. Very annoying price action. You're not getting like this very explosive price action. Like ARK was one of those first ones where you're just like, that's explosive. So that was nice. But, today was a good opportunity to lighten up on a third. And then now I can kind of just let it work. And it's a completely stress-free de-risk trade. That's going to be a green one no matter what. Is it a home run? No. But it falls into the category of, it won't be red. It won't be flat. It'll either be decent little green, or it'll be a home run if this thing ends up going to $75, $80.
Exactly. Perfect. Yeah, were there any other names that you wanted to bring up or you think is worth talking through?
I bought the gap up the same day. I bought, so this one I played it kind of as a same day because I noticed how strong Sezzle and Dave was, and I also bought Tesla. I kind of did go into Toast and bought Toast and TMDX on the gap up day. And this one's been spectacular. So I kind of saw like a little pivot in here, and I ended up buying it, but using low of day as my stop. So I bought it. I didn't even buy this thing as a high volume close, which again could have been bought the very next day. But because I had noticed Sezzle, because I had noticed Dave, because I had noticed Oddity, because Tesla was ripping through the 200 and pushing well, I just felt like we were in a good market, right? So there are instances where I'm even comfortable buying the earnings gap up. So I ended up buying TMDX on the same exact day that I bought Toast. And Toast is getting a little annoying.
Yeah.
I love this name, but bought Toast, Tesla, and TMDX. I still have Toast. I still have TMDX. But, while Toast is just kind of going sideways here, TMDX is just kind of continuously grinding. But, again, it just goes to show you just know your setup, whether it's a high-volume close or whether it's just a simple earnings gap up or whether it's just a flat-based breakout or a pennant breakout like ARK. Just know your setup. Trim and then just trail. And then today I also did trim some more TMDX because we are officially getting a bit extended from the 50 simple moving average, and TMDX I bought May 9th. It's been a super one. So May 9th, trims on half on the 21st. On May 21st. So where the heck is this? So this little red day here. So effectively it's like a little first red day. 120.96. This had to have been, I'm assuming, in after hours or at the very lows of the day. Nope, at the effectively very low of the day. And then I trimmed some more on 610. On 6.6 at 137.05. What day is this?
Yeah, the gap up day.
Oh. Today.
No, 6.6, right? You said?
Yes, 6.6.
Yeah, so the fall.
Yeah, so this little gap up day.
Okay.
Yep, at 137.05, and then a little bit more today. And the more extended we get from the 50, the more I trim it down in pieces, usually just 20% of what I have left. So, one of the sell rules that I actually learned from Jeff's son is as you're starting to get extended, kind of using ATR, so whatever a stock's average true range is, and for, TMDX, we move roughly 4% per day. Once you start to get 28% away from the 50 simple moving average, trim 8 times, its average true range from the 50 simple moving average, trim some more, 9, trim some more, 10, trim some more. And if you kind of look at where we're at from the 50 right now, we were almost 40% above the 50 simple moving average today from the 50. So 10 times its average true range from the 50, trim some more, and then you can just I don't really want to be in a stock once you get to 15 times its average true range from the 50. At that point, naturally a stock needs a pullback, needs to digest, and even the 50 is not caught up to my average, so I'm definitely not giving it that kind of wiggle room. So now I'm just down to about a quarter position left. And it'll just allow me to just sit there and do nothing with it. And again, Toast, it hasn't really pushed enough where, I want to get rid of it, but I am just, inching up my stop. And then, today's little close, just will allow me to inch up my stop to today's lows. Yep. And again, it's a bit annoying, but, some work great, some not at all. And that's just the reality.
It's not doing too much wrong. It's just kind of setting up another consolidation right now. So, and I like the monthly on this one.
I love the numbers. I love Toast. I bought this thing for my fiance at, she's got it way down here in the base when it got back up above the 200. Gapped up on earnings. I bought this little pullback for her.
Yep.
So she's been sitting there for forever. In fact, I even bought her Tesla yesterday at the open. She's got a whopping 5 shares from 285.
There you go.
So she's hanging in there.
Awesome. Well, yeah. Were there any other names that you wanted to talk through, or I think we've gone through.
I bought. Yeah, the last one that I recently bought. I just bought JPMorgan today, and we could talk about these because you know how we were looking at all of these semiconductors that looked effectively the same, whether it was LRCX, ASML, and KLAC, and AMAT, and we were talking about them all.
Same with the banks. Yep.
Same with the banks. You got your move up. You got your digestion. Now, again, these are super, super slow. So if you're into high flyers, growth names that are really going to move the needle on your portfolio, JP Morgan's not for you. If you're into a stock that you just want to get some money into the market, because I prefer, I've said it before, slow money's better than no money. This just has this really nice consolidation, kind of looks like it's coming out of the consolidation. I bought it as it took out yesterday's highs, and you can look at Goldman Sachs, right? You can look at, BK. These just all look at Morgan Stanley. These all kind of just are sporting the exact same kind of look. So just kind of going down the list, if you were to pick one, which would be your favorite to own? Well, JP Morgan's probably the one. If it doesn't work, right, your loss is puny. If it works, it's a wallet patter, right? You might be in it for a long time. And, some people will say, well, it's so slow, why do you care to own it? The reality is I wouldn't cut it until, one, it breaks low of day, or until there are so many setups and I'm fully invested and I'm almost on margin, and there's like these 4 or 5 other stocks. Like, let's just say I was like 95% invested, and Shopify starting to push out, Coin starting to push out, SoFi starting to push out, a few names that look good and are on the radar, and Uber's reclaiming the 20 simple moving average. Well, if you're at 90% invested right now and you own JP Morgan, then I'll cut a JP Morgan and start to look at those faster, younger, growthier names. But if you're sitting on 60% in cash, well, then you need to get your money to work. I'll take it however I can get it, even if it's slow in a JP Morgan, while a few more other setups start to push and give me some follow through. And then once I'm close to fully invested, start to cut off the slowest, trim the most extended, cut the weakest, right? So as they would say, you cut your weeds and you water your flowers. So that would kind of be my thinking, just cut the weeds, water the flowers, and buy the younger, the growthier, the quicker. But if those are a bit choppy right now, and they are, because some of the best ones, you've got a Rubric, getting hammered after earnings, big pickup in volume. Again, I like Rubric, but this was just a frozen rope, and it broke down on earnings, and you get follow through on volume, and you get, this unfilled gap. I'm not touching it. You need to go now sideways for a while, or you need to come way down to the 50 and build a little higher low there. And then maybe I would be interested in a little stab at it. SE's another one of those. Just was like effectively a frozen rope. You gapped up on earnings, and now you've effectively broken that earnings low, right? I'm not really touching it until it builds a whole new base. Zscaler, quite extended. Carvana, quite extended, right? You get like this frozen rope. Now, is it just going to hold here? I don't know. But I just know that it's still not a clean enough setup for me to buy. And when I start to see that, I kind of just start to be a bit more proactive, like another warning sign, right? Like Uber got, broke below the 20 and hasn't been able to get back up above. MicroStrategy was one of the first few ones that took off early. Hasn't quite been able to reestablish itself above, but this one's a bit more Bitcoin dependent. Palantir, big volatility recently around the pit. I mean, if you look at the weekly, some of the biggest volume bars, those are red volume bars, right? And so you've got quite a bit of volatility, up near these highs. Now, can it keep going? Yeah, absolutely. I could see it keep going. But I want to be thoughtful that, some of the biggest volume bars, they're actually distribution bars. And so I see that, I recognize it, and, I don't want to be stubborn. So, starting to see a few red flags, starting to see a few of those stocks that had gone vertical. Again, GEV, another example. Recent big frozen rope winner, pick up in volume on the downside. CEG, another one of those. Pick up in volume kind of, from that Meta report, follow through. Yesterday, this little upper wick and continuation to the downside. And what's the other one? VST, similar deal. So it's like when I see that pick up in volume to the downside and effectively just a chart that doesn't have a pattern here that I could come and buy. So I see that. And again, is it any surprise that an Oklo kind of went lower today and an SMR kind of went lower today? No, not really. And then you kind of start to see these two and you go, oh yeah, that's kind of ugly, right? That's and not only that, it's extended from the 50. Like, yes, I understand it's flagging up here, but it wasn't buyable today because it was extended from the 50 for my process. So yeah, birds of the feather flock together. These things just need more tightening. And when you start to see kind of groups coming down in unison, just avoid them altogether. It's what got me to sell my KGC the other day. It wasn't just my KGC. I bought this thing off of the rising 50 on 515 using then the 50-day as my stop, right? I trimmed some off a few days later, and then I trimmed some off on this day here, 6.6. I cut the rest of the position. Well, why? Wheaton Precious Metals was acting poorly. AEM was acting poorly. NEM was acting poorly. And so, again, when the group is acting poorly, take heed, right? When one of the names is just acting well alone, it's fake. when KLAC, LRCX, TSM, ASML, when they all look great and they look great together, there's something going on there. When one of them looks great alone, right? And Richard, think back to 23. How awesome was Nvidia and that huge move that it made? Was it the only semi moving? No. It was ABGO, it was ACLS, it was ALGM, it was AEHR going from teens to 50, right? It was, stocks were, all semis were flying everywhere. MPWR, KLAC, ASML, those same ones that we've mentioned, all of them. I remember this flat-based breakout in ACLS. This thing was absolutely gorgeous over here. And just a textbook setup, right? You get this nice little move up and you get this sideways digestion, right? And here you go. Start of 23, and it wasn't just Nvidia going in the start of 23. Here's your ACLS doubling effectively frozen rope. And then move up, move sideways, move up, a little tight move sideways. And they just do the exact same thing over and over. Right? First you get a base, then you get a breakout, then you get a small high tight flag, and that's just how they move. It's the same thing over and over, but it wasn't just Nvidia. It was supported by great group action. And that's really the way I think. Group. It's the most important way to think about anything. It's the easiest. It's like the cheat code, right? And I don't, Stan has talked about this before. That's partially how he looks at the market.
Yeah, I was going to say, maybe there's a reason Stan talks about it, O'Neill talks about it, Darvis talks about it. They might be onto something. We'll
be onto something. It's the easiest way. It's like the cheat code, right? It's like when I buy gold, I don't care how the QQQ is acting, right? I'm focused on gold, right? So it's like, when I hear people saying all the time, like, oh, the market's not acting well. Well, it's like, yeah, but what stocks do you own? Because that makes all the difference. Oh, the market's not acting well, but I'm long KGC from mid-13s. It's acting great for me, right? But we're not in the same things, right? If you're like this oil guy and you love your oil and energy names and you're like, oh man, the market's terrible. It's like, well, man, I'm in semiconductors. Those things are acting fantastic. So again, what groups do you own? And then don't go buying the stock when the market's acting well. Buy the stock when the market's acting well, and then you're onto the one that's been showing relative strength, like bucking the market trend. Then all of a sudden, the market starts to turn up, and then now you've given your stock the best chance from the day you buy it to push away from your average because the market's not going down, right? It's like the market is like those hands on that ball underwater. And then the second, right, and some balls are deflated all the way at the bottom of the pool. Some of them are fully inflated, and they just keep popping up right to the surface of the water. Well, all of a sudden, it just takes the market to take its hands off, and that ball just, right, it's the first one to breach the surface. And that's your Netflix, that's your CrowdStrike, that's your Palantir, that's your Hood, that's your Zscaler, that's your Rubrik, that's your SE. Those are your leaders. Once they get too extended, you got to trim some off. You got to be out a little bit, and then let them reset up. If you're into holding them for a few weeks while they base, or you've got a small piece that you're just trimmed and you don't really care, God bless you, right? But, once you get a little too extended, make sure that you own very little, and then let them, reset up if they have to. And if they go sideways for 5 months like Nvidia, then you come in and hammer them again.
Perfect. Yeah. No, I think that's really well said, and maybe a good place to pause for today. This has been really, really good, and definitely some great golden nuggets for everybody watching. If you had some general advice for traders just starting out, maybe in their first year of trading or first 2 years of trading, what would you say to help them, I guess, accelerate their learning curves, or just stay in the game too? Because that's half the battle. What general advice would you have for new traders out there?
Yeah, focus on stocks in leading groups. Don't trade your favorite stocks, right? They make the stocks that are in leading groups your favorite. Don't just say, I like XYZ company because of, whatever reason you conjure up in your head. To me, all stocks are bad, and they're only good. Like, again, 6 months ago, I probably was maybe even bashing Cathie Wood a little bit. Now I'm about to get a poster of her in my office. And so that's the way I view anything, right? They're all bad until they're showing you a profit. So, and the way you'll get a profit quickest is make sure you're focused on stocks and leading groups, ideally the top 40 groups. Understand your entry tactics. Let progressive exposure pull you in. Let a proliferation of setups pull you in. Let market follow through, keep you in. And really, that's some of my best advice. You have to be focused on stocks and leading groups. If you're not, you're just going to spin your wheels. And then another piece of advice, like I mentioned it before, don't trade relative strength on a market down day. Just track it, right? Let it show you its cards, right? And then all of a sudden, that's a 20 at the blackjack table. Now you show up when the market's pushing higher, then you can put your money down on that table because you're putting your money on a 20, right? And I can go heavy on a 19, 20, or 21 anytime, right? There's never a guaranteed 21, or you just got blackjack for sure. But when a hand's a 20 or a 19, and you can comfortably put some up. And that's the difference between gambling at a casino and gambling in the stock market. The difference is I get to see my cards first, and then I put my money down.
Yep.
At the casino, they don't give you that luxury. So focus on stocks and leading groups, understand your entry tactics, understand your daily entries, align your buys with a healthy market. And that's really some of the best, trim some into strength, treat it like a business, and then just allow, these little moving averages to work for you. That's it, right? Do the less you try to override sell rules like I did with CrowdStrike, right? I would be up another $30 a share if I didn't do that. But at the same time, when they break a key level, like a Tesla, don't be afraid to take your money off the table, right? At the end of the day, the money's not yours until you sell. So, just do the very best you can. It's okay for it to be a longer learning curve, right? I think that's totally normal for most people. And then, again, let progressive exposure pull you in. Please position size properly. Just because you take a position for 10% doesn't mean you should go from 0% invested to 100% invested in 4 days, right? That should take a couple of weeks and in a healthy market. You're trading your biggest when you're trading your best, and you're trading your smallest when either the market's not healthy or you're not seeing things well, right? And then you're really taking no drawdown because you've got no exposure to the market. You tried to get yourself positioned on a 10% position. You can't do it. You took a 0.15 or a 0.2% loss. You do it again, you take another 0.2% loss. You do it again, you take another 0.2% loss. Those 3, 4, 5 drawdowns in a row where you end up losing 1% or 1.2, it is totally something that you can overcome in a few days. So let the market pull you in. Every dum-dum makes money in a bull market, right? None of us are geniuses. It's just the market. But the people who have the most success are those who align themselves in the best stocks, in the best groups, with technical setups that they understand, and they allow proper position sizing and patience to pay them, and not, the size that they're taking. So a lot of little nuggets there, but again, they all go hand in hand. So they're very important, and it's important for people to kind of put that little puzzle together in their mind, and it all comes through.
Yeah, that's a great place to end it. Thank you again, Ariel, for so much for your time. Where can people learn more from you if they'd like to get in touch? We'll have your Twitter link down below. Anywhere else we should point people to?
Yeah, I mean, I've got, a Discord, but, people can just always find me on X. I'm, always, I mean, anybody who's ever spoken to me privately knows I try to get back to everybody, even the non-blue check marks. So if you guys just find me on X, I'm always happy to chat, always happy to talk markets. And, if people want to come join the pre-market prep in the morning, I'm always, 7:30 Central Time, 8:30 Eastern, an hour before market open. I'm effectively at my screens, fielding questions, kind of going through my watch list, prepping a little bit for the market open. And I'm there Monday through Friday. So people can always come find me and ask questions about, their favorite or least favorite stock Monday through Friday, 1 hour before the open.
Awesome. Well, thank you again so much for your time. Really appreciate it. To everybody watching, definitely one that you want to watch again. Take some really good notes. And if you did enjoy this, check out the links in the description, as well as, of course, leave a like on this video and subscribe to the channel for more interviews coming soon. So with that, thanks so much for tuning in, and we'll see you guys in the next one. Cheers.